Hey everybody, it's Mark Yagi. Welcome to another Market Pulse. Today is December. Can you believe that we're already in December? I cannot, but we are. So there's like a time warp or something going on. Anyway, we're having a green week, a green market, and green market is good, at least in my book, because we mostly do covered calls. And basically, if you don't know what that is, we buy a stock, you sell calls against them, you get income from the calls, and you make your most amount of money on a covered call when the stock goes above the strike price. And so that's your max profit. Mathematically, it's true. If you don't believe me, just do the math. Anyway, that's what we do. But we are in a green market, like I said. So I'm just going to analyze some stocks. If you don't do covered calls, that's fine. I'm going to analyze some stocks and show you the way I'm looking at the charts. No, that's not the chart I wanted to show you. I wanted to show you something else. So let me show you that something else. Here we go. Okay. All right. So we are in this kind of green market deal. And this was last week. This is this week. So 4 green lights. That gives us a green market. Green means go. I've bought a few things this week. I bought some NVDA in a Microsoft position with a covered, kind of a covered put or a put spread. What else do I have? Microsoft, a little bit of strategy. It's making a hammer candle. I'll talk about that in a second. There's a few other things that are out there, but it's a week where the market, it seems to have the probability, and I use a market timing system that you're looking at on my screen, that probability lines up. And when it lines up, it's like, I read a book a couple years ago, and I've studied probabilities in Las Vegas. And the deal is, when the cards are running, or when the count is in your direction, or when you have the advantage, that's when you push more of your chips in. And so I look at that like the market timing. It's kind of a tailwind. And when the market is doing well, most stocks are actually doing well too. So that's when you want to be in. That's why I spend so much time analyzing the market. I know very quickly I say on these market pulses, hey, we're in a green market. But when I say that, it generally means, look, we're green. And that means it's fertile because you have a higher probability. There's no guarantees on things going higher, but it's more fertile to be buying things. That's why I bought things this week, because we're green. Okay. Let me show you why. So this is the NASDAQ. This is probably the worst performing of the indexes, and it's pretty good. Just because we had this little swoon down over the last month or so, and now we're back up over the 50, the 200, the 21, the 8-day. We're heading up to that 24,000 high, maybe, and we're not there. But if you look at the other ones, we're really close. So looking at the SPY, really close. Looking at the Dow Jones, really close, right? Up off that bottom and up over the major moving averages. And if you look at the New York Stock Exchange, we are at a new high, all-time high. So, and the New York Stock Exchange is the broad index. What does that tell you? Well, it tells you that the economy and the way that people feel about the economy, regardless of what everybody's talking about in the news, because the news is there to sell ads to you, they believe that the market's, good. The economy is good. Yeah, we're having a few layoffs, but think about the layoffs in proportion to the amount of AI productivity that's increasing, for example, right? So, there's a duality to this market, and you have to kind of take it with a grain of salt, sand, salt, whatever. The Fed is about to print money, or they've been printing money, or they're going to print more, or they're going to stop tightening less, whatever it is for you. We're in an environment, like I've been saying for years now, where the Fed has to print money, okay? And so because our interest rates are high, and they've raised the cost of money on themselves, so they have to print more money to be able to afford it, because you don't hear about anybody cutting taxes. And if taxes aren't getting cut, there's not enough money to cover the interest rate, because those are going higher. Something's got to give. They print more money. That means your dollars become worth less. Your house doesn't become worth more. Still the same 4 walls with a roof. Your dollar is worth less. That's the thing people just don't get. They think they're getting rich by being in their house. Meanwhile, everything's going up in price, almost everything, right? So let's take a quick look here. Right here, we've got the VIX. The VIX is the panic index, and it's a reverse index. And so when you see this kind of coming back down into the 15s, panic is coming out of the market. That's why the markets are going up, because money is coming off the sidelines. Where is it going? Well, let's take a look. Here's some of the stocks that I know a lot of people watch. Certainly the people in our mastermind group talk about these stocks all the time. Here's Apple. Apple had a breakout here at about 259, 260. and it's now, went to 288, and it's a textbook pullback on a very boring stock. I have to say, boring is what Apple is now. And boring is what we like in covered calls, but not everybody likes boring. So anyway, there is Apple. AppLovin, which is a stock that I just got, it's in a breakout zone. Doesn't look like it today because it's down a couple bucks, but generally it's breaking out above 675. So I'm in it, and it's got a nice little, looks like a double bottom pattern there with 675, which is a breakout. Okay, let me go a little bit, I don't know, faster. Seems like I'm going fast though, but Tesla's in a consolidation. It's coming up the right side of a consolidation, heading for that all-time high, but heading for the interim high at 474. Will it get there? I don't know. There's a lot of sellers up here, and there's not a lot of reasons to buy Tesla, like news-wise. Like, they're not reporting numbers, they're not reporting inventory or sales. They're just kind of chugging along. Maybe they'll report something here, and then the stock will go higher, something about robots, something about robo-taxis or whatever. But to me, it's kind of in this consolidation back between 382 and say 474, and it's going to go back and forth, and the bears and the bulls are going to fight it out. That's what Tesla's about. But I think over time, Tesla is an unbelievable company, but who cares what I think? All right, there's Palantir. I've been telling people Palantir is a great company, but the stock is in a late stage base, high probability of late stage failure. And you know what? You see it playing out on the screen. At 188, it's tried to break out several times. It bounced off the 50. It went up to 207. Now it's back below the 50 and trying to maintain it by the end of the day. That's not the sign of a stock that wants to go higher. It may go higher. It's just I want the probabilities lined up on my side. So I'm not buying Palantir. Up to you if you want to buy it. That's awesome. NVIDIA is one that I'm buying, though, and this is several failed breakout attempts at this 184.50 level, but it's coming back up the other side. I don't like that it's under the 50-day moving average any more than you do. That's not healthy when a stock lives below its 50. But I think I'm going to give it a little bit of breathing room because we're coming off a red market, and now we're in a green market, and it's trying to get in that buy zone, and maybe we'll be able to get rid of some of these sellers at the all-time highs. We'll see. I don't know. It's a lot of wishful thinking, sounds like, right? Here is strategy. A lot of people have been in strategy. I have a small position in this one, and it's gone from 457.22 all the way down to 159, I think is where it got a low. But the reason I'm showing you this is because there's this thing on the chart. You don't see it on the daily so much, but you see it on this weekly. You see this candle right here? That's a hammer candle. Imagine taking a hammer and putting it on the ground. It looks kind of like this, with the close being up here in the fist. Now, the fist is a little bit lower, and so you have a little bit of the wick sticking up, but it's a pretty strong bottoming hammer candle, which usually is a reversal candle. And so you look at this and you say, okay, look at the volume. It's 110% of normal volume. That's double the normal volume. That's a textbook hammer candle. I don't know if we're going higher from here. I can tell you that in the patterns that I study, when you get a hammer candle, and it's off a significant bottom, off an oversold situation, which I think we have in strategy, you get a nice bottom and a move up the other side. Who knows when it's going to happen, if it's going to happen. Of course, it's highly Bitcoin dependent. We'll see. All right. Hims and Hers Health. This has been in trouble for a while. This is a lousy chart. And now we're going into a death cross where the 50 goes down through the 200-day moving average. What that tells Wall Street is there's not a lot of buying in this stock long term. There's a lot of selling. And so that signals the sellers to come out of the woodwork and start to sell. And you're seeing it come down from 65 to 32. That's almost a 50% drop. And, it's trying to bounce. Now it's bounced to 40, but it's bounced on such low volume that there's not a lot of conviction. You're going to have to hang in this one for a while, but Hims and Hers Health is, I think, in a little bit of trouble. Or at least I wouldn't buy it here. All right, so Microsoft is kind of similar. It's a little bit stronger, but it's bounced off the 200-day moving average, made a gap up, filled the gap, and now it's still below a lot of the averages that I watch. It's still below the 50. I've got a little Microsoft, I think I have to say. But I'm not loving this action. It's below the 50. I don't like stocks that are below the 50. I may pull the trigger and get out of this one. We'll see. Right now, it's doing okay. All right, SOFI Technology. A lot of people like this one. It's gapped down on volume today. It's a little concerning on SOFI. I don't know if the sector's in trouble or not, but you can look at Hood. Hood is making a double bottom. It's got a lot of work to do from 130 to 150 to get to that breakout point. IBM is in a buy zone. within 5% from this 296.16 breakout spot. So I kind of like IBM here. I've been talking about it for a while. It's kind of boring. It's been boring for 30 years. But maybe they're back in style. I don't know. The last one I'll leave you with is Intel. I think the government said they were going to invest in Intel back in here, try to save this big stalwart chip maker that's been a boring company. And it's anything but boring now, right? It's anything but. It's now back above, all the major moving averages. It's up above 40. It almost hit 50 or 45, I should say. Lots of good stuff going on with Intel, and it's in the great sector, which is the chip sector. But, I'll leave it there. I think that's enough, right? A lot of good ideas for you. I hope you have a fantastic weekend. Thanks for joining me here, as you always do, I hope, every Friday. If you haven't subscribed to this YouTube channel, now is a good time. That way you get notified. If you haven't joined my Insider Tips newsletter, it's free. You might as well get in that. When we do have a video, then you're going to be immediately notified on that. And I can't put up all of my videos in this platform anymore because, they don't like seeing over my shoulder trades. So I've got to show them on my website. I try to do what I can to show them here, but the market pulses don't seem to be a problem. So I'm going to keep putting these out as long as I can. Anyway, thanks for joining me. Green Market. Have a wonderful weekend, and I'll see you next week on the Market Pulse. Take care and happy holidays.